To another Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options, not having a clear plan is the enemy, and using a proven tax deferral strategy such as the deferred sales trust to exit highly appreciated assets is an amazing way for you to create and preserve more wealth so you can help your clients, friends, and family access more freedom and time with whatever that they're wanting to do after they exit highly appreciated assets. Hey, my name is Brett Swartz. In each episode, I'm joined by some of the best real estate, financial, and wealth advisors in the world. And each and every week, we're trying to bring you even new guests from different perspectives to add even more value to everyone who's listening out here. Today is no exception. I'm excited about our next guest. She is from the great state of California, now in Florida, and she previously co-managed the #1 ranked Nicholas Applegate Global Technology Fund in 1999, up over about almost 500%. She has institutional investing experience, includes over 25 years of investment firms representing diverse strategies, asset size, responsible for over $6 billion in assets and types, mutual funds, insurance, RIAs, hedge funds. She's also a manager and co-founder of GMR, a developer of utility-grade solar, battery, and wind farms, co-founder and executive advisor to multiple funds and startups, and so much more. Totally going to rock this interview. I already know she's going to be great. Please welcome to the show with me, Emmy Sobieski. Oh, Emmy, how are you doing?
I'm doing great. Thanks so much for having me, Brett.
Absolutely. And for our listeners getting to know you for the first time, would you give us a little bit more about your story and your current focus?
So my story is 25 years as an institutional investor. As you mentioned, I ran the #1 fund in the world in 1999, up 493%, and then shifted over into the corporate side and startups, where I'm an advisor, an investor, as well as a COO for a couple of startups. So the main thing that I love to talk about, and the thing that I've done for all of my career, is I've mentored and coached other people on their careers, because I believe your biggest investment to make millions and hundreds of millions is choosing the right career and mapping your correct path.
Amazing. And by the way, if you want to get with Emmy right now, you can go to emmysobieski.com. I'm going to spell that for you. It's EMMYSOBIESKI.com. And we're going to be talking today about building a $100 million career. But before we go into that, Emmy, I do want to take one other step back. I believe we've all been given certain gifts in this life, and these gifts have been given to us to be a blessing and help to others. So I'm curious, what would you say are your one or two strengths or gifts that you believe you were given, and how does it help how you help and bless people today?
I think one of the things we were talking about before the show was that my mother was a screenwriter, and she was a screenwriter when there weren't very many women screenwriters, and she ended up winning the Lifetime Award in television writing, and did participate in several strikes, like one that's going on now. And she was incredibly independent and very career focused and very successful, both financially as well as just in her career. And that really helped me see a path where I could be independent and successful and help others do it as well.
Amazing. So having a mom that instilled in you independence, strength, success, maybe an exceptional what she does. Wow. Lifetime Achievement Award. Absolutely amazing. With that in mind, Emmy, let's dive right into what's the #1 secret to building a $100 million career?
I call it the 3 Bs, and it's break in, build equity, and break out. And the biggest mistake that I see, and so obviously the biggest key to making that 100 million, is to avoid this mistake, which is to stay in the break in, get too comfortable in the break in phase, and start building equity too late in your career. And so that's really, the biggest key is that, plus picking careers where you actually have the chance to make 100 million.
Okay, so that's pretty succinct there. So it's the 3 Bs: break in, build equity, break out. And the #1 hindrance sounds like people staying too much time and energy staying in the break in, and then too late of building equity. So maybe tell a story. Maybe tell a story of two paths, right? Of maybe some clients that you've helped, and maybe those that you've seen that perhaps are not taking action with these two things. What does that mean when you say stay in the break-in for too long?
Yep. So let's even take a famous example that people all know. Peter Thiel, the head of the Founders Fund, one of the founders of PayPal. He's a billionaire. He's super successful. You would think, wow, he's somebody that I want to follow. And you listen to him speak, and one of the funds that he's created is to pay kids $100,000 to let them quit college early and start a startup. And one of the famous ones that won that was Vitalik Buterin, the creator of Ethereum. And so you'd think, wow, this guy's great, but he regrets having gone to, he graduated college, and then he went and got his law degree at Stanford. He got a Stanford MBA. Then he worked 2 years in a law firm. Then he worked as an investment banker, finally started PayPal. Compare that with Mark Andreessen, who built his own company while he was still in college. And 2.5 years after college, he had already IPO'd his first company. And so, they're both billionaires. But when you think about it, Peter Thiel spent too much time in his own mind, and also, just if you compare it to other super successful, brilliant people, spent too much time in the breaking in phase.
Fascinating. And so I'm curious, obviously it's some of it's built into us, right? We're taught to go to college, we're taught to get the degree, we're taught to, go to law school or whatever it is, all of those things, the traditional ways of doing things. And what's the, I guess, best kept secret to helping, either parents who are teaching their children or even themselves to reach out and be independent and take risk and go for it, be an entrepreneur?
So the number one thing that I've heard from all of the people that I've coached, as well as those that I've mentored earlier in their careers, is they didn't even know these paths existed. Right? They didn't even know that they could go after the big money. They didn't know how to become a board director. And so most people that I speak to are in their 50s saying, hey, I have this great advice. I want to get on a board. Well, frankly, it's too late because people want you on their board because you've grown a company from 20 million to 100 million. So you've got that P&L experience, and then they want to grow their company from 20 million to 100 million. And then they get you on their board. And so a lot of these careers that lead to 100 million, and there's something also that I call the money flywheel that you want to get in the center of. But a lot of them you need to know early enough. And so you need to know that that's something that you've got to do, right? You need to know that you need to move from breaking into building equity, and you don't just start getting more and more comfortable in the career that you've initially broken into, that you need to get over your fears and make that move. But you can't know that. You can't fight your fears if you don't know the path and the map of where you're moving to next.
I've heard where there is no vision, that people perish, right? And I feel like where there's no vision, your careers, or the potential for your careers and the impact and the money you can make, the people you can help, the dreams that you have, perish, right? So if you don't even have a vision, if what I'm hearing correctly, for the even possibility of an alternative, more entrepreneurial path, it's probably never going to get there. You're going to get stuck in the startup, which leads into staying in the break-in, right? Versus building equity. So let's move into the building equity phase here, right? So talk about the best way to build equity, to get on boards, to get in a position where you're positioning yourself to actually succeed in a big way.
Yep. And that's what I call the money flywheel. And if you look at people in Silicon Valley, a lot of the most successful people you see are people that are executing their own money flywheel. And this is being part of, either as an LP or a GP, limited partner or general partner, being part of a venture fund or a private equity fund. And I think it's going to be more common in the future to have private equity part of this. But right now, be part of a venture fund as kind of a part-time GP/LP. Be in a startup, so working in a startup in the C-suite where you have P&L, profit and loss responsibility, so you can show that you grew that startup, and then be on boards of directors. And so once you're doing that, you're talking with the most powerful people that know where all the greatest next opportunities are while you're on the boards. You also get equity on these boards, and some people can get paid 10 million in equity to join a board. So, there's really big opportunities there. And then you can make millions in the equity that you get paid for growing the startup that you're in. And then you also get carry. Excuse me, I'm just getting over a cold. You also get paid carry, which is a percentage of the profits or percentage of the returns in a venture fund. The key, though, is so that's your money flywheel that you want to get in the center of. And so the key is to join a startup at the right moment, and join the right startup that also where that startup is in a great growth phase or the right moment in its own history. So it's funny because it sounds like we're talking about careers, but we're talking about wealth building, and we're talking about, money and wealth and your most important investment, which is your career. And yet a lot of people, when they hear of a new opportunity, or somebody said, they just think about how much more they're going to make that year, or, they don't spend the time to really analyze the industry, the company, the same way they would if they were making an individual stock investment. And yet it's the biggest investment of their life because it's time they'll never get back.
Yeah, it sounds like what you're talking about here is building equity cash flow or equity opportunities versus just cash flow, right? I think that Robert Kiyosaki talks about the cash flow quadrant, right? And you're either going to be an employee, you're going to be self-employed, you're going to be an investor or a business owner, right? And it's just focusing like a laser. How to become a business owner? How do you have equity share? How is the money flywheel connected to, being in the C-suite, being part of GP, LP interest, being responsible for the profit and loss, right? Making the big decisions. Anything else to add there before we move on to the next phase, which is breakout?
So one of my smarter coaching clients said to me, as soon as you have a liquidity event and make a bunch of money, make a couple $1,000,000, you wish you had cash flow. But when you have cash flow, you're wishing you had a liquidity event. And so one of the beauties of this flywheel is that the money flywheel allows you to have a lot of bets on the table at once. So you're not starving at a startup and wishing that you had some cash flow. Maybe you have some cash flow or an exit from one of your board opportunities, or maybe you have some cash flow from your part-time work at either as an LP or a GP. So it's both. It's setting you up with multiple bets, and it's also setting you up with some kind of balance between cash flow and big exits.
Okay, interesting. I think I want to dive into this part now, right? Because this is all making sense. Now, someone might say, okay, well, how do I get on these boards? How do I get into the inner circle of the Silicon Valley and the tech startups? What is it about finding and or attracting because of your talent and your skill set? Do you interview for these boards? Is it, talk about the inner circle and jumping in, and maybe tell a story of somebody who was maybe on the outside who got in and provided tremendous value at that C-suite level and was able to parlay that into, an excellent exit.
Yeah. So the interesting thing is I do get a lot of people, they've read my book. They're, as I say, about 50 years old, and they're like, look, Emmy, I'm ready for board work. And you look at their career, and their career has been fantastic, but it's been in R&D, or it's been in an area that boards aren't interested in. And if you think about what a board of directors wants to do, especially at a startup level, they, at the private company level, they want to grow the company. And so that's the trick for the boards of directors, obviously, is to network. You do interview at the end, but you don't really network in. And I have a friend that's been on boards for 20 years, and I asked her, I said, well, do you ever decide, oh, I want to target this company. And she said, she had in the past, and it never works. She just said they come to you, and they know what they're looking for. But how do you become the person that a lot of boards are looking for? You've got to get in sales. In some opportunity, if you're in sales and you're able to grow an organization from 10 million to 50 million, or from 50 million to 100 million, then all the organizations that are similar in similar industries that are looking for that are going to want somebody on their board. One exception is that if you're a partner at a venture firm, the venture firm makes a big investment in the company and then they get a board seat. But so you're kind of like put on there, but you're not really requested. And so it's very different to be a venture board member versus an independent board member where they've sought you out for your expertise. Both are fine. And so one way to get on boards is to be a venture partner, right? Break into the venture industry. And another is to build your own company, which is the highest risk, and kind of lowest assuredness that that's going to happen, or be part of another company that gets built. But you can't just be part of it. You need to be part of the P&L of actually showing that you can grow the top line.
Excellent. Okay, so by the way, we're talking with Emmy Sobieski, and you can connect her. Go to Emmy and her last name Sobieski.com. That's EMMY.com. All right, so got it. You're building your business yourself in a massive way, and you are in sales. You have that skill set, and you have the P&L demonstrated producing results. And others that are wanting to go out, they're going to find you, is what you're saying. You're also networking some, but it's not as if you're like, raising your hand to interview. They're going to ask you to interview with them or be a part of that. It sounds like A. And or B, it's a venture partner where you have been, elected or opened up a board seat, and now you have some experience there. Is that a fair summary there? Any other
Perfect.
thoughts? Or okay.
Yep, that's perfect. And so the thing, when you think about building equity, the biggest issue that I find is that people stay too long in breaking in to move to building equity, as we talked about. And so I can tell you about one, which is a perfect transition. He did a masterful transition, and actually built an entire career, just going into these two phases, and built a wealth of $7 billion.
Please tell us.
Yeah. So this is actually, this guy basically started out as a computer programmer, which a lot of people do, right? And he was working at Compaq Computer, and he so he started at Compaq Computer, a couple of years at Compaq, and it's very common to finish college, and I'm not at all advocating that you got to start building equity and quit college. I'm not at all advocating for that, but this is a very common thing. You finish college, and then a couple of years in an industry that you want to analyze, and then you go get your MBA, and then you come out on Wall Street as an analyst in post MBA. And this is a great way to do it, to break into investment banking if you haven't figured that out by the age of 16 or something like that, and do it straight out of college. So this is what Bill Gurley did. He was from Texas, worked at Compaq Computer straight out of college, and then went and got his MBA. Then he was on Wall Street as a top analyst, covering all these computer PCs and stuff. And as you know, PCs kind of grew. I mean, Dell was a fantastic growth company for a while, but in general, they're not the sexiest companies. And this was in the late 90s. I knew him personally. I was on the buy side in New York when he was on the sell side. Then Deutsche Bank. Now this is one of the other things I like to talk about is you have your head down, you're working hard for your career, but there are these moments in time where you need to kind of look around and pause and say, is there a major change happening? And that's what Bill did very successfully. Deutsche Bank, which was from Germany, said, hey, we want to build a US team. There's all this excitement around internet and technology. And then late 90s, tech was just going up, huge every year. That was when my fund was up 500% or 493% in 1999. And so they said to him, we want you on your team. You're on our team. You're institutional investor, ranked #1, et cetera. And smartly, he said, the only way that I'm leaving First Boston to join Deutsche Bank is if I get the internet, if I'm the internet analyst. And so he was able to use that desire for his skills to move from being a computer analyst to being an internet analyst. Deutsche Bank's a large company with a lot of assets behind them. And so he was able to win the Amazon deal, and he took Amazon public. So now he is looked at, and think about this. This is using your career to create a narrative of how other people look at you. He's now no longer looked at as a PC guy. He's looked at as a platform guy. Then he joins Benchmark as a general partner, takes Uber, invests in Uber, and is worth $7 billion. So typically, then I say the breakout phase would be if Bill would go and start his own company, but he has no need to do that, right? He's already made $7 billion. Now, the very richest people in the world, like a Bill Gates and Elon Musk, are all in that third phase where they have gone and taken the biggest risk of starting their own company, and they've made it big.
Okay, phenomenal. I'm going to try to encapsulate that because there was so much wisdom there. And of course, she wrote a book on this. If you're curious, it's called "Building a $100 Million Career." I believe that's the book name.
$100 million careers.
$100 million career, yeah. And so you can get the book as well. But it sounds like this gentleman, Bill Gurley, he took his, he went to school, computer, graduated, starts working, gets some general understanding of some working and the insides of a computer, moves to an MBA, and then moves that into like investment banking, sees a big major opportunity, jumps on that and says, I want to be a part of the internet, part of this, part of it, right? And then lands the Amazon deal, right? So all of a sudden he's used his career to change the narrative. It's no longer he's just a computer programmer, right? He's putting these massive deals together and he's connecting all the dots, right? And then it starts to parlay into other places like Uber. Is that a fair summary? I mean, that's an incredible story, by the way. Thank you for sharing that.
Yeah. Well, if you think about what he wanted to do, there was no real venture investing. Like, he wanted to get into venture capital, but there's no real venture investing in PCs, right? But that was everybody that's hiring you is they're not trying to fit a round peg in a square hole. They're trying to fit a square, peg into a square hole and a round peg into a round hole, right? They're like, let's get the person that we're most confident can do this job. Correct?
Yes.
And so with the beginning of the internet, you can't raise your hand and say, I want to be an internet analyst, because people are like, well, what's your experience? I need someone who's already been an internet analyst, something like that. But you have the most chance to not do it with experience when you have something brand new like crypto or the internet, or like AI. You have that chance. But a more assured way, which is what Bill did, was he basically started in computers, which is very typical. You start in computers, you get your MBA, and then you say, I'm going to analyze the computer companies I was working at because I have contacts there. I have an understanding of how computers are built. I understand what goes into the computer. So, I'll be more helpful as an investment banker, as an analyst, to explain this to others, right? So that's like phase one. But he doesn't want to end up he wants to end up in venture capital, and they're building the next thing. And the next thing is not more PCs, right? There's no venture investing in that. So he needs to kind of take what he knows and then shift that over. So he's got to shift that over to internet. And so he becomes this this asset that they really want, which is a invest, II, it's called II, institutional investor number one analyst. So they want that. And then he says, you're only going to get that if you give me a chance in this new area. So it's like that the round peg in the round hole for them was they wanted a whole team of II number one analysts, but not everyone's going to go with them. And there were no II number one internet analysts at the time because like it wasn't a space yet. And so that gave him the chance to move over. And so then he was going to be at this big wave at the beginning in venture capital, but he first had to do it in the public markets and make a big splash. And then a lot of people wanted him, and he went to a place, Benchmark, which is very, very what's called flat, which means that all the partners are paid equally. You don't have to have been there a long time. And so when he brought the Uber deal, even though he was fairly junior, he got a huge payday.
Amazing, amazing, amazing. So it sounds like taking what you know and having the vision and the taking the action, the faith that it could shift to a new venture, right, and a new place, and essentially shifting, by default, negotiating a deal where your career identity is not tied to the old one, although it's using and leveraging the old one. And he's seizing that moment with Deutsche Bank to negotiate to become the analyst of the internet, which then continues to move forward into that new venture. And I think I got it right. Is that right?
Absolutely. So he is basically like think of your career like a startup, right? He's building, he's pivoting, he's listening to feedback, and he's building towards where all the opportunities are.
Yep, makes perfect sense. So 2 questions, right? You mentioned a little bit AI and crypto, right? I imagine those are some of the major changes that are happening, right? Besides those 2, you can touch on those 2, but anything else that you see as like major opportunities for people that might be considering making some of these shifts?
Yep. So crypto is an interesting space. I think you really have to be a crypto person to go after that as a career. However, 2 of my mentees who have made it huge went after crypto. That's Linda Shea, which is spelled XIE. She's the founder, and she runs Scalar Fund, which is a crypto hedge fund. And then Greg Magadini, and he's already had an exit where he sold his company to Amber Data. And so so crypto is a space. They both made their first fortunes buying Ethereum after the ICO, but which is it's like an IPO, but it's basically a initial coin offering. Anyway, but crypto's a space where there's it's similar to the internet at the beginning, where there's a lot of nefarious activity, and as well there's a lot of innovation. So you just need to have the kind of the risk appetite and an understanding of the space and a love for the space that you can make it through the crypto winters, because there are a lot of them. And AI has similar winters. When I look at industries and what to go after next, AI is I try to get in at the right time. So you want to get in when you see signals, like Greenspan used to say, that the green shoots. You start to see things percolating up again. And so an example of a green shoot would be last December when OpenAI released ChatGPT. You still would have made a fortune on I think more than 100% on Nvidia from then until now, right? But now there's still opportunity in AI, but it's everybody's talking about it, right? So you're kind of at a second stage, or a second inning, or a third inning. And it doesn't mean that AI won't be super successful in the very long run, but you are going to have these periods in technology where people get a little bit disappointed with the lack of progress. The area that I'm really excited about, where I'm an advisor and an investor, is the identity layer of the internet. And there's a paper coming that I'm actually writing right now, co-writing, that's coming out. We're going to talk about it, which is that ChatGPT and generative AI in general read the internet, and that is full of both personal information, PII, as well as just our own signatures of the things that we tend to do over and over, shows who it is. And there's a bunch of regulations, a bunch of privacy regulations that say I, as a human being, ought to be able to say, you can't, you got to remove my data. I don't want my data used. But how do you do that with something that read the internet? Because it can't unsee that. And so there's a really interesting technology that this company Journey has, which allows you to get all the benefit of the knowledge without ingesting personal information. And so it's called a zero knowledge proof, which actually takes us back to crypto, which, anyway, that's one of the things. Crypto came from cryptography, and one interesting thing that's done in cryptography is called zero knowledge proofs. And anyway, I'm going way down the rabbit hole, but I'm very excited because I think the internet never had an identity layer. And the more that AI and crypto, but especially AI, propagates our lives, 45% of companies are using ChatGPT, and 70% of their employees are not telling their bosses that they're using it. So the more that this kind of thing propagates our lives, the more that we need to think about, what is human, what is not, what is a deep fake, and where's my identity? And we need to have an identity layer on the internet.
We are talking with Emmy Sobieski, and it's EMMYSOBIESKI.com if you want to learn more. Emmy, one other topic, and then we'll do the lightning round. And we have to ask on Capital Gains Tax Justice podcast is part of why we're here. And people have these big exits, these cryptocurrency, these businesses, this real estate, they IPO, they have public or private stock. What would you say is the biggest frustration when it comes to capital gains tax deferral or solutions for people when they go to exit and they're facing 20 to 50% of their proceeds being wiped out by tax?
I think the biggest frustration is that a lot of the opportunities, I was talking about this money flywheel, being in a venture capital, being on boards, being being where other great startup founders are. That is California. To some extent, it's Austin, Texas, but that happens. If you're really going to look at where you're going to get your board seats for the exciting companies that are going up, where the exciting work is being done, i.e., at Stanford, at Berkeley, it's happening in California, and yet you have the most, the toughest tax situation in California. And so, you exit and then you just realize that you have all kinds of issues.
So what if there was a way to have flexibility on those exits, right? Where you didn't have to worry about a 1031 exchange or these short time frames, or being able to not invest back into your own deals or next venture capital deal, or be an angel investor. And it can work for any asset of any kind, as long as it has $1 million net proceeds, $1 million gain. And essentially, it can also eliminate estate tax, which is another issue too, above me on this stepped up basis. I'm curious, would boards be looking for somebody like that to help them navigate those waters and look at their options to make sure that, it's not just about cash flow and appreciation, it's about tax flow when you exit?
Well, most of those exits are going to be that the people that are dealing with the issue are going to be the individuals on the boards, not the boards themselves. And so the people that would be more interested in that would be your financial planners and your private bankers, that are trying to advise the people that have the equity, that have built that equity, and now are thinking about, how do I keep as much of the money that I've made?
Right, exactly. Yeah. To that point, right? It'd be helping them who are exiting, who are already board members, and they have those individual things. I'm curious, you probably exited some assets and some things in the past. What have been your strategies to defer capital gains tax, or plans for building a capital gains tax exit plan?
Well, one of the greatest strategies that I see is starting your own venture capital fund, because then you can defer those gains using carry. So I think that's one of the ones that I've seen a lot, which is just creating, having a venture capital fund that other people invest in as well. But there is, an opportunity to take those gains and basically capture them as a percentage. You kind of capture them as a percentage and you carry them forward, which
Okay,
is
so
why
let's
it's
walk through
called
that,
carry.
right?
It's
Let's go
called
through.
carry.
Yeah, let's walk through that. So let's imagine you had $100 million worth of Ethereum, right? And you want to exit that now, right? And it's California. So let's say you're going to pay 33%, maybe even 37% of that. So you exit the 100 million. Can it roll into this venture capital fund, or are you saying
you needed to create the venture capital fund ahead of time?
Right. So what happens if you hadn't created ahead of time and you wanted to fund that venture? So rather than having to go to like angel investors or private investors or the bank, to come in and finance your next $100 million startup, what if it could come from your previous exit and you could defer the tax and that could fund it? So it's kind of like go fund yourself versus getting funding from somebody else.
Yeah, that I don't have any expertise on.
Excellent. Thanks for sharing. We do. And so if anyone's listening to this, we have a solution for that. It's called a deferred sales trust. You can go to capitalgainstaxsolutions.com and you can start to build an exit plan. We found that most high net worth individuals, those who help them, they struggle with clarifying what options are available and which ones give you that flexibility to still be an entrepreneur, to exit crypto or business or primary home, GP, LP interest, carried interest, captive insurance, really any asset of any kind, public or private stock. Close to 30-year track record now, thousands and thousands of closes. A lot of people still don't know about it. By the way, you can check out the book, Building a Capital Gains Tax Exit Plan, if you want to learn more. And maybe, just maybe, Emmy will have me on her show and we'll go out and make a huge difference for a lot of families because we're both from Taxifornia and we both have been on the front lines of tax for many, many years. Now, it's funny enough, we're both now in Florida, which is kind of cool too. But that being said, Emmy, are you ready for the lightning round?
I'm ready.
All right. Knowing what you know now, if you could go back to your 20-year-old self, what's the one golden nugget make sure to tell yourself to do?
Move to building equity much earlier. I should have left 15 years before I did.
Excellent. Question number 2, what's the number one book you've recommended or gifted the most in the past year?
Never Split the Difference.
By the way, absolutely amazing. And for those who haven't got that book yet, you got to get the app that's called Masterclass. And Emmy, I don't know if you got the Masterclass app yet, but it has Chris Voss shares the masterclass of basically Never Split the Difference. And I probably watched it 50 times. I'm not even kidding you. Like, it's that amazing because you could read the book, you can listen to the book, but watch him like literally do the things. It's just phenomenal. So if anyone hasn't got the book, get the book, but get the masterclass. Okay. Question number 3. What are you most curious about right now?
How long AI, how long this AI wave is going to last.
Second to last question. What's your favorite leadership quote or theme that you strive to live by?
Better lucky than smart.
And the last question, after all your success, helping all the people you've helped, what's the habit or practice that you try to practice consistently that helps you stay centered in your values and stay encouraged to charge forward and reach even higher heights?
Getting 8.5 hours of sleep a night.
Easier said than done, right?
But that's the focus. That's the focus. That's the goal. Absolutely.
Well, Emmy, it's been more than a pleasure. We usually don't go past 25 minutes, but you had such wisdom and such amazing insight. I want to just thank you for being on the show. Thank you for the extra time. I want to encourage you to keep using the strengths that your mom instilled in you, which is being independent, chasing excellence and being world-class in everything you do and helping people build $100 million career so they can go make an impact in this world. For those who want to get in touch with you, would you mind one last time, what's the best place for them to find you?
EmmySobieski.com, or you can also reach me on LinkedIn.
Amazing. Thanks, Emmy. I also want to thank everyone out there for listening to it. Another episode of the Capital Gains Tax Solutions Podcast, also streamed on Expert CRE Secrets. Again, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options when exiting highly appreciated assets. Not having a plan is the enemy, and using a proven strategy such as the deferred sales trust is an amazing way for you to exit, defer hundreds of thousands to millions of dollars of tax. Fund your next business venture, real estate, free up your time and your energy, diversify your wealth. All you need to do right now is go to capitalgainstaxsolution.com to start to build a plan with myself or one of my team members. You can also check out the book. We have Kevin Harrington from Shark Tank in the book as well, hit #1 bestseller. It's called Building a Capital Gains Tax Exit Plan, Building a Capital Gains Tax Exit Plan. Check that out on Amazon or our website, capitalgainstaxers.com. Thanks so much for watching, and